Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 149, published March 7th, 2025, titled The Low Carbon Stocks for Sustainable Investors. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, at this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the articles and more company and stock information. I'm beginning this podcast with my just-released annual favorite sustainable company ranking, Corporate Knights 2025 Clean 200 list. Here are some quotes from an article by Corporate Knights staff introducing the 2025 ranking. Quote, California-based shareholder advocates, As You Sow, and Corporate Knights, Canada, today released the new cohort of the Carbon Clean 200, a global list of 200 publicly traded companies leading the sustainable clean energy economy. It shows sustainable companies on path to dominate global economy. Key findings include the top 10 companies on the list by revenue include Apple, Contemporary Amprax Technology, Microsoft, Tesla, Taiwan Semiconductor Manufacturing Company, and Volkswagen. 35 countries are represented in the Clean 200, including the United States 41, China 21, Japan 18, Germany 14, and France and Canada 11 each. Clean 200 companies earned more than $2.5 trillion in sustainable revenue in 2023, the most recent year for which full-year results are available. Clean 200 companies generated a total return of 190.9% on a sustainable revenue-weighted basis, outperforming the MSCI ACWI Index, 162%, and the MSCI ACWI Energy Index of Fossil Fuel Companies, 76.7%, on total return gross, US dollar basis, from the Clean 200 inception of July 1, 2016 to January 29, 2025. $10,000 invested in the Clean 200 on July 1st, 2016 would have grown to $29,090 by January 29th, 2025 versus $17,670 for the MSCI ACWI/energy benchmark for fossil fuel. The industrial sector accounts for 52 companies on the list, followed by information technology at 32, and consumer discretionary and materials, 29 each. IT companies had the highest total sustainable revenue, a cumulative total of more than US $687 billion. It is telling that clean energy stocks generated more than double the returns of fossil fuel stocks since 2016, despite political headwinds, underlying that stock markets care more about economic materiality of the parabolic growth in clean energy than the political leanings of the day, says Toby Heaps, CEO of Corporate Knights and co-author of the report. The Clean 200 utilizes the Corporate Knights Sustainable Revenue Database, which tracks the percentage of revenue companies earn from sustainable economy themes, ranging from green power to electric vehicles to plant protein and smart buildings. The list excludes companies that are flagged on Corporate Knights' list of red flag companies, and As You Sow's Invest Your Values suite of mutual fund transparency tools that identify companies involved in fossil fuels, deforestation, the prison industrial complex, weapons and tobacco, as well as the exclusionary screens that form part of the Corporate Knights Global 100 methodology. End quotes. The next article is about a sector that appeals to many ethical and sustainable investors, yet few invest in it directly. The article is titled 3 Natural Foods Stocks Positioned for Success in 2025. It's by Sumit Singh and is on Zacks.com. Here are some quotes from the article. Companies like the Hain Celestial Group, Inc. and Vital Farms, Inc. are responding to the rising demand for organic, clean label, and ethically sourced foods. However, this article focuses on these 3 natural food stocks to watch. Quote, 1. United Natural Foods, Inc. stands as a prominent player in the natural foods sector, serving as one of the largest distributors of organic and natural products in North America. Through its extensive network, United Natural Foods supplies a vast array of products, including fresh produce, pantry staples, dairy alternatives, and plant-based foods. With its diverse portfolio, the company caters to both retail giants and independent natural food stores. This Zacks ranked number 2 buy company is increasingly focusing on innovation and sustainability within the natural foods space. The company is committed to enhancing its supply chain practices, reducing waste, and supporting regenerative agriculture initiatives. United Natural Foods is also working closely with suppliers to accelerate food innovation. Through its Supplier Go-to-Market program, the company has simplified the process of bringing new natural and organic products to store shelves. This initiative has enabled suppliers to reintroduce thousands of SKUs that were previously discontinued, expanding consumer access to diverse and healthier food options. 2. Sprouts Farmers Market, Inc. has been at the forefront of the natural and organic food movement, catering to health-conscious consumers seeking fresh, high-quality and ethically sourced products. The company's commitment to fresh, organic and attribute-driven products sets it apart. With nearly 46% of total produce sales now coming from organic products, Sprouts Farmers Market continues to expand its assortment, ensuring accessibility to high-quality, responsibly sourced food. The Zacks Rank No. 2 Buy company continues to strengthen its connection with customers through tailored marketing and engagement efforts, such as social media campaigns and in-store discovery events like Sprouts Brand Discovery Days. These initiatives showcase the company's differentiated offerings while attracting a younger demographic and increasing foot traffic. 3. Beyond Meat, Inc. is transforming plant-based food by using cleaner, healthier ingredients. The company's latest Beyond 4 products, including the Beyond Burger and Beyond Beef, are made from a blend of yellow peas, brown rice, red lentils, and fava beans. These ingredients provide 21 grams of protein per serving, while cutting saturated fat by 75% compared to traditional beef burgers, thanks to the use of avocado oil. This commitment to nutrition has earned recognition from the American Diabetes Association and the American Heart Association, reinforcing Beyond Meat's focus on making plant-based options both tasty and healthy. This Zacks Rank No. 3 Hold company's commitment to food innovation extends beyond retail food service partnerships. The reintroduction of Beyond the original orange chicken at Panda Express and the expansion of Beyond Nuggets at McDonald's locations in Europe underscore its ability to integrate healthier, plant-based options into mainstream dining. At the same time, Beyond Meat is working to educate consumers on its clean label approach, challenging misconceptions about plant-based food processing. End quotes. This next article is by an analyst who frequently appears on this podcast, Matt DeLallo. He is also writing about one of his favorite stock picks. His article is titled, "This infrastructure stock could be the best investment of the decade." It can be seen on Fool.com. Now here are some quotes by Mr. DeLallo on his recommendation. Its Brookfield infrastructure has an embarrassment of riches. The leading global infrastructure company is capitalizing on not one but 3 massive global megatrends: decarbonization, deglobalization, and digitization. These catalysts help drive the company's view that the world needs to invest an astounding $100 trillion over the next 15 years to maintain, upgrade, and build infrastructure. Given its leadership in the sector, it could be one of the best investments over the next decade as it capitalizes on massive opportunities to invest in infrastructure. Multiple growth drivers. Brookfield Infrastructure believes that a trio of organic drivers will grow its funds from operations by 6 to 9% per share each year. 1. Inflation indexation. Brookfield's infrastructure businesses produce very stable cash flow backed by long-term contracts and government-regulated rate structures, many of which link rates to inflation. Those escalators should boost its funds from operations per share by 3 to 4% per year. 2 is GDP growth. And 3, reinvested cash flow. Brookfield pays out 60 to 70% of its stable cash flows via dividends. It retains the rest to fund high-return organic expansion projects, which should drive another 2 to 3% in annual funds from operations per share growth. A trio of value enhancers. Brookfield Infrastructure's megatrend-powered catalysts position it to grow its earnings at more than 10% annual rate for many years to come. On top of that, it pays a more than 4% yielding dividend that should continue growing at a healthy rate. Those factors alone position the company to deliver total returns of about 15% per year. Meanwhile, there's additional upside potential from an expansion in its valuation multiple. This high total return potential could make Brookfield one of the best investments over the next decade, especially when factoring in its much lower risk profile." End quotes. Now, my final article is by another analyst on Fool.com. Her name is Robin Hartill, and the article is titled, "How to Buy Constellation Energy Stock." Here's some of what Ms. Hartill says of her pick. Constellation Energy is the largest provider of carbon-free energy in the U.S., supplying about 10% of the nation's zero-carbon electricity. The Baltimore-based company's nuclear, hydro, wind, and solar generation facilities power about 16 million homes in the U.S. The company was established in 1999 as part of Constellation Energy Group, but later merged with Exelon Group in 2012. Constellation Energy then spun off to become its own publicly traded company in 2022, focusing primarily on nuclear and renewable energy. In January 2025, Constellation Energy announced plans to acquire Calpine, a privately held company that's the leading generator of electricity from natural gas and geothermal resources in the U.S., for a net purchase price of $26.6 billion. The merger will create the largest provider of clean energy in the U.S. Last year, the company also made headlines when it inked a deal with Microsoft to restart a 3-Mile Island nuclear power plant and power its artificial intelligence data center. If you want to invest in the transition to clean energy, buying Constellation Energy stock could be a smart move. Is Constellation Energy stock profitable? Constellation Energy stock is profitable. The company reported generally accepted accounting principles net income of $11.89 per share and adjusted operating earnings of $8.67 per share for fiscal 2024, easily beating the top end of its twice-revised guidance range of $8 to $8.40 per share. In the fourth quarter of 2024, it posted adjusted earnings per share of $2.44, well above the analyst consensus of $2.19. The company's Q4 and full-year earnings report contained several other pieces of good news for investors. Constellation Energy said it completed $1 billion worth of share repurchases in 2024 and grew its dividend by 25%. It also received a credit ratings upgrade from Moody's, which could make it cheaper for the company to borrow money for projects that will power its growth. Constellation Energy pays annual dividends of $1.41, which works out to be a dividend yield of 0.44% based on its share price as of mid-February 2025. That may not be the kind of dividend yield that excites income investors, considering that many utility stocks have yields well north of 3%. But the stock could be worth snatching up if you're looking for dividend growth. Since becoming its own publicly traded company in 2022, Constellation Energy has increased its dividend every year. The company said in its 2024 annual report that it expects to hike its dividend by another 10% in 2025. End quotes. Now, a couple of additional article links. One titled Lenovo Honored with Prestigious Corporate Governance on 3blmedia.com, and that's in a press release. Two, titled TOV ETF, a unique blend of financial growth and ethical investing on pradashtak.com by Ankit Puri, and one article from the UK titled 2 Funds for Investing in Most Attractive Developed Market on .ii.co.uk by Morningstar. These are my top news stories with the stock and fund tips for this podcast, the low carbon stocks for sustainable investors. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on March 21st. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.